What's going on, fellow retail investors? With your Wall Street boss blunts coming at you here. Got some huge news on silver outflows, the reverse repo program, hacking of technology going on all around America. I think it's pretty safe to say it's the Chinese Communist Party, but who knows for sure? It might be the CIA. You never know. Those three-letter agencies are definitely up to no good. As I've told you guys before, we are now coming at you live from Dallas, Texas, as I have moved out here to begin the search for our new offices for Xchange. Xchange is a new broker-dealer coming at you in the following months to take retail orders directly to lit exchanges, to lit markets, such as the New York Stock Exchange. Anyways, let's jump right into the reverse repurchase program. The RRP is currently collapsing. As some of you know, if you've been following this channel for a while, and if you didn't know, I'll explain it real quick. The RRP was implemented and taken over by the Federal Reserve around September 20th of 2019. September 20th of 2019. It seems that was a long time ago. It was quite a few years ago, obviously. This occurred because the RRP was blowing up on September 19th. And what that means is that banks were no longer able to get liquidity at a good price. The interest rate soared. And in order to bail out the banks, again, this is a recurring theme, the Federal Reserve was forced to take over the RRP, the reverse repurchase program, and continue these reverse repo operations through the Federal Reserve itself. It's basically an overnight lending program in which treasuries and such are borrowed from institutions and banks to the Federal Reserve on one day, and the following day they are repurchased for the federal funds rate plus 0.05%. And as it was exploding on September 19th of 2019, the Fed took it over, and it went from nearly $0 to billions of dollars, and then hundreds of billions of dollars. And then COVID, the pandemic, came into play as a means of bailing out the financial system. A lot of people believe, who cares what you believe, the fact is that it was a fluke that was used, even if it was a man-made fluke, it was used to bail out the financial system. And that's exactly what occurred. A massive influx of liquidity occurred into the RRP and out of stocks and other assets, bonds, etc. at the time of the pandemic. And since then, it's gone from 100 billion, 200 billion to over 2.2 trillion dollars, $2.2 billion in funds entering and exiting the reverse repurchase program every single day. As of today, the reverse repurchase program is collapsing. Today, the RRP was at a measly, not measly, it's still a lot of money, but it is down to 1,450 billion, 1.45 trillion currently. The reason this is occurring is because there's a massive liquidity crunch in which bank liquidity is collapsing. The tightening of lending is occurring because of the increased interest rates. And what was once over $2.2 trillion in liquidity sitting in the RRP every single day is now collapsing into $1.45 trillion. And that's still a lot of money, but it is regardless an insufficient amount of money when you compare it to that is required to maintain a safety net for the largest banks in the world. The largest banks in the world such as Goldman Sachs, JP Morgan, Wells Fargo, Citigroup, and so on, are over-leveraged between 45 to 105 times in total notional derivatives. The majority of these derivatives are rehypothecated and bilaterally netted. And what that means is that they're trading them against each other. And they're trading them against each other in the hopes that they will cancel each other out in times of massive losses. Goldman Sachs is over leveraged 105 times of their actual assets in total derivatives notional value that we know about. The collapsing, okay, reconnected now. Collapsing of the RRP is directly attributed to the rising of interest rates and the collapsing of the American economy. Even though you might not know it yet, we entered a recession last year, even though most people have no idea. They don't have the slightest clue that it's actually occurring. As of today, I've just gotten confirmation from one of my Twitter friends in Japan, and he has confirmed to me that today silver outflows on the Shanghai Exchange are over 58.8 thousand pounds. That is 980,000 ounces. Almost 1 million ounces of silver are flowing out of the Shanghai Exchange today. Today, ladies and gentlemen. If you don't understand how much silver this is, it's literally tons of fucking silver. This is evident that central banks and large institutions are taking out gold and silver in actual physical form. They're exchanging their paper for physical assets. And in my opinion, physical assets is one of the most important things that people can own. I know you silver stackers and gold stackers are probably pretty excited to hear that. But the fact that nearly 1 million ounces of silver are leaving the Shanghai Exchange today alone goes to show just how much these physical assets are valued. The current cost and pricing of gold and silver and precious metals is extremely manipulated. 97% of all precious metals trades occur in dark pools and over-the-counter. If you're unaware, dark pools and over-the-counter trades are constantly being abused. Constantly being abused by the world's largest banks in order to manipulate the price of silver and allow the banks and central banks to stock up on it. Meanwhile, less than 1% of people around the world actually hold any silver or gold whatsoever. If you own more than 500 ounces of silver, you are in the top 1% of silver stackers in the world, ladies and gentlemen. Keep that in mind. If you own more than 500 ounces of silver, you are in the top 1% of silver stackers in the world, of which only 1% of people in the world actually own any precious metals. That's not a pager, that's a radar detector. Just so you know, AJ. So I had to turn it off for you guys. Black Widow's got silver. I know a lot of you guys have actual precious metals. If you take a look at certain special purpose acquisition companies, you'll notice that when they IPO, they achieve extremely high, often, not always, but often achieve extremely high levels of gains. Many of these special purpose acquisition companies, such as Cheche, C-H-E, you go up hundreds, if not thousands of percent on their IPO date. Yesterday, Cheche, C-H-E, look it up if you've never heard of it, most people haven't, went up over 1,700%. And then later that day and during after hours yesterday and today started to collapse. Hedge funds abuse these, much like you saw in the movie The Wolf of Wall Street. In The Wolf of Wall Street, the IPO of Steve Madden was abused and pumped and then dumped to create massive amounts of money and liquidity for short hedge funds. There's nothing new here. These special purpose acquisition companies and the profits obtained from them are used to prevent margin calls on situations that occur during liquidity crunches and market collapses. Many people may or may not be aware that meme stocks, such as AMC theaters, are one of the greatest threats, aside from precious metals, to and gold are traded 97% in dark pools and over the counter. There's a reason that AMC stock and GameStop stock are traded so heavily in dark pools. And that is because they want to manipulate it and prevent the price from going higher for as long as possible. At some point, short hedge funds will have no choice than but to close their positions and go net long on silver, gold, and meme stocks. Whether you like them or not doesn't matter. The fact is that at some point, this will occur. Particularly when you have bond markets exploding, yields exploding, which causes the price of bonds to collapse, and an outflow of the bond market and the stock market as well. Money market funds are run by shadow banks. And you have heard on this channel many times an interview that I have posted when I showed you where Janet Yellen specifically stated that shadow banks and the shadow banking sector pose the largest threat to the financial stability of this country, along with over-leveraged hedge funds. And the Federal Reserve just came out this week and stated that hedge funds are gamifying the United States Treasury bonds. That's why just yesterday, if you watch my Twitter, you saw that we posted that the 2-year bond yield exploded from 5.01 to 5.3% in a matter of minutes. And then likely by the New York Fed or the plunge protection team, they repurchased these bonds that were being sold off by either Japanese or Chinese governments, other governments around the world, were sold off, and that reduced the 2-year bond yield to 5.03, still elevated levels. If it sounds like I'm talking gibberish, it's probably because you're not aware of the manipulation going on in these markets. And I will tell you that it is fierce. That was not a glitch. The 2-year bond yield exploding to 5.5%, an increase of 0.3% in a matter of 1 minute, did not occur by accident. It was not a glitch. Those are real numbers. And that occurs when central banks like China sell off
massive amounts of United States Treasury bonds, because aside from the Federal Reserve, China and Japan are the number 1 and number 2 owners of United States Treasury bonds. Ladies and gentlemen, the economy, the stock market, the bond market, the real estate market, the car market, the RV market, none of them are in good shape. And what you're hearing from banks and mainstream media is not the truth. They will never tell you the truth. They will tell you what they and Jim Cramer want you to believe. Make sure you're properly invested. Get out of ISDA banks. Act accordingly. Make sure you're properly hedged. As you all know, I'm a big proponent of getting out of ISDA banks. And I have left my banks a long time ago. I closed my JP Morgan accounts. I closed my BMO Harris accounts long ago. And I was at other credit unions in Illinois. And now that I'm in Texas, I'm here at the Credit Union of Texas to open up further accounts that I may need. Because ISDA banks are set for a real collapse. If you didn't know, a few weeks ago, Evergrande right off 95% of banks around the world own bonds in Evergrande and Sunac or both. And when the commercial real estate sector in China collapses, commercial real estate and commercial mortgage-backed securities will collapse around the world. And then residential real estate mortgage-backed securities, MBSs, will collapse, and credit default swaps will skyrocket. Take a look at your local housing market. Take a look at what's happened this month, what's happened over the last 12 months. Almost everything in the South has greatly lost value. Many things up north and in Florida are still retaining their value, but we're about to enter the colder months of the year, the colder months of the years, and that will directly lead to a further collapse in housing prices. Now, ladies and gentlemen, if you think that real estate is safe right now, you're in for a rude awakening. I'll leave you at that. I wish you all peace and wealth. Make sure you're properly hedged. Before I go, AMC issued 40 million shares of their stock on the open market on September 13th. And the current price action greatly reflects that which occurred in June of 2021 when they issued shares. June of 2021, AMC issued shares, around 25 million shares on the open market. That occurred on May 13th, 2021. And on June 2nd, the price spiked up to $79. And on May 13th, it was at $10.90. So as you can see, about 2.5 weeks later, the price spiked around 700, 800%. At that point, it reached around 3,200% up from its all-time lows. In January 15th of 2021, AMC issued 23.5 million shares on the open market, January 15th. And on January 28th, AMC ran up 1,200%. About 2.5 weeks later, ran up 1,200% to over $10 a share, right? Because it was at around $1 a share, ran up to $15 a share 2 weeks later after the share issuance. Now, September 13th, 2023, AMC has issued 40 million shares. And as so far, AMC's price went up for a few days, came down for a few days, and is now starting to stagnate. We are still about a week and a half from what I suspect could be another all-time high. And I may be wrong on that, which is fine, because if I am, It doesn't change my due diligence. It doesn't change the short interest. It doesn't change the on-balance volume. It is not a date to go and gamble on, but it is a date to be aware of. Dates are very important. Not a date to, if you wear your heart on your sleeve, it's not a date to go and gamble on and dump money into options or shares simply because you're expecting the price to change based off of speculation of what's happened in the past. Because history doesn't always repeat itself, but it often rhymes. Now, I'll leave you at that. I wish you all peace and wealth. I hope you're properly hedged. We're going to be motherfucking rich.